The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians on this 11th day of July. My pleasure to be here. This is an interesting session for three reasons. One is, when I did my update to my subscribers from opening call yesterday at 1:10, I said that there were a couple of things that are happening. We're not going to change any of our positions. We're not going to suddenly go long. We're not going to add to the shorts just yet. We just missed, because of my nervousness, shorting the exact low again of the TZA, which is the high of the IWM. And the only reason was I just wasn't sure of what kind of stop I wanted, how much percentage risk did I need to take. It was kind of tough. I should have just gone with my instincts and gone with the technicals that I had analyzed the day before. We had just missed buying it. I would have stayed in that position if it were there. It's unfortunate, but there are a couple of things going on here, and I'll explain what I'm looking. So that was number one. Number two is I had reached a peak D and E in the 120-minute charts of key indexes. You'll see right here, it's a D in the E-mini 120-minute chart, the S&P 2797.75. And it did the little U-shaped pattern, retested exactly at 2797.75 for three bars, and then that was the close. And look what happened overnight. Boom! It goes from the 2797s down to the low today in the 2765s. Now, what's really important about this? So that was number two, and the third thing was within the context of the markets. The big decision was, do I change our short position that we've had from the day after the high, all-time high, sorry, the recovery high in the 25,000s this time, not the 26,000s? Do I change that designation or just lift it? And I said, no, we're staying in our short position. Same thing with the SMH as the semiconductor index. All right, now we can get everything out the way. The E-mini is down 20 at 27.76. What's really important about this is that you've made a cup formation, snuck just a tad higher, 1.75 higher than the 27.96 high of the 13th. It's a quick move to the upside, quicker than the down move, but the MACD did rally, but it isn't even close to where it was on that big rally going to the high of the 13th, 14th of June in the E-mini, and at the same time, the stochastic is at 85%. Let's get out of this because most people don't even look at the E-minis. They're busy looking at the actual charts of the indexes and the funds and the ETFs. So I'm just going to say that the E-mini weekly chart has gone to a leg D, and it's once again just above that peak C that was made on the left side, and it is under the peak B minus that was made at 28.14 back on the week of the 16th of March. A lot of this says a chunk of the work to the upside has been done. Now we'll see whether or not we're tying this all in with tariffs and geopolitical, whatever it is you want. It doesn't matter. And if you're also looking at overseas markets, for instance, let me just look here. The FXI is down again. It's down 0.83 at 42.20. Let me get rid of this 120-minute chart right now. Don't need it. Peak E in the monthly chart of the FXI, iShares, China. Of course, we need to know what China's doing. China large cap ETF. That was a particular high that was made January, I think, January at 54 round number high. Gosh, I had that in and then I forgot to rewrite it. 54 round number high, 2018. Now, this is very interesting because with China coming down like this, some of our indexes are at highs. And of course, I can only think of the expression that is just so fitting here when the FXI, when the China large cap ETF goes low, we go high. All right, well, enough with that. Let's just go to the markets, and we're looking at INDU. The Dow is right now down 182. It went to a peak D top on the 12th of June. What is the peak D top? Let me show you right here. This is my newsletter. I always show this in the Chapman Wave methodology. You try to identify the lowest, most obvious low bar, and merely count each successively higher peak. When you get to the fourth highest peak, alphabetize them alphabetically in sequence, A, B, C, D, uppercase on the way up, lowercase on the way down. It can go to E, F, and G, but it's at D that other things can happen. Whoa, can other things happen? Just look at this. We made right here, a peak D in the daily chart. We made a peak E in the monthly chart. Haven't yet got a down arrow because it just hasn't met all my criteria. I think I need to move this a little bit to the right. A little to the right, a little to the right, and then you need to go a little there. Now look at this weekly chart. Weekly chart goes to a peak E at Chapman Wave 5 completion 2616 on the January the 26th, and then pulls back to a double bottom 23,360, 23,044, and 23,344. It makes the lowercase h to a lowercase m, and that's the thing. One of the ingredients I was looking at yesterday when I did my update for my very rare update. Don't often do anything. I just like sometimes to hold hands and let's look at things together. And that's basically what we did. Doji high on the 12th of June at 25,402 goes to a trough D as a really nice rally. The rally takes you. Now, let me just show you some. Should I do that now? I'm going to do it later. Let me just run the numbers. The Dow, if it goes to 25,000 in the next week and a half, very positive action. If it breaks down and goes underneath 24,500 in the next week, 23,400, I should say, that's not going to be a very good sign at all. S&P down 19 at 2774. It did go to a new high yesterday, and I have to call it E/B. I meant to do that yesterday. E/B, high of a recovery high, not an all-time high, 2795.58. Let me put that in. 27. Of course, I can't even remember what I said. 27.95, I think 58. I have to come back and check that out. Good grief, mister. Come on. Surely you could remember something. Yep, that's it. Good. And that's the most recent high. It should be a leg B, but I'm calling it an E/B because double tops can fail, and you've gone to a leg D in the weekly chart. There you made a peak D in the Chapman Wave weekly chart at 2872s. On the 26th of January. Monthly chart peak D, just a consolidation so far. It's a rectangle formulation. We'll see what happens over the next week. Now it's going to get very interesting. Look at the QQQs. Had a spectacular run up until yesterday. Cannot go to 177.99 to start a new leg to the upside. In fact, 20th of June, 177.98 makes the top peak D, pulls back to 169. Runs up, and now what's going to happen? Is this a double top, or have we started to turn to the downside? And the weekly chart didn't go to that leg D, just missed it. 177.98 is the high. We'll watch this closely. I'll be back. Dow's down 185. Basil Chapman, Tiger Conditions Hour. Bye.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I've just a slew of questions have come in. Let me just go to them because I think each question, from my quick glance at it, was very pertinent to what we're looking at. What's the wave count in the IWM? Can I double check? Yes. There was a peak E at 160.63 January the week of the 26th. This is the Russell 2000. Pulls back from 160 to the 142 area on the week of the 9th of February. Runs up to 160.30, misses taking out the left side high. So it's called an A. I called it a gray A because it didn't make a new high. Then it pulls back to the 147-ish area, runs up again and makes another gray A on the week of the 20th of April at 158.38. Pulls back, holds the 9-period moving average and the 14-period moving average and runs up once again. And this time it's an extended move that goes green candles, 1, 2, 3, 4, 5, 6, 7 candles higher to the 20th of week of the 20th of June at 170.20. It makes a high. That's an all-time high. Turns around, has a weak, WEAK, breaks under the 9 EMA, closes on it. Next week, touches the 14 and then breaks sharply above it. And this week makes a new recovery high, but not an all-time high. Stops dead at 169.87. That was the high in the 10th. And the pullback we're looking at now is still quite mild. The MACD in the daily chart is making that flat. I like to put a rectangle there just to explain it to subscribers visually. And it failed to get to 80% in the stochastic. So this has the signs of a potential double top in the daily. I'm just going to make it real clear. If there is a close above 169.87, I'm going to be safe. I'm going to say if there's a close above 170.20, no big deal. It's 50 cents high. If it's going to get to 169.88, it's probably going to go right through 170.20, which is the all-time high. That'll start leg G/C, but it'll also say to me, wait a minute, the weekly chart is showing much more strength. It'll probably go to a D. That's the way I'm looking at it. At this particular point, I need to see a close in the IWM Russell 2000 under, I've been saying 166s. I'm going to hold that. I'm going to keep that. Under 166, it's trading at 167.69, down only 85 cents today. If it does that over the next week, that's going to be a big negative, and that's going to suggest double tops in place. Doesn't say that double top means it has to go all the way back down to the 160 level. It says watch the downside after that because the MACD weekly is still very strong. Stochastic is strong at 84%, but both the on-bounce volume and the stochastic are turning down. But here I am looking at the relative strength, the gray line, also turning down. Very important. A very important moment right here, because yesterday we had the inverse of what was happening all week with the IWM strong and the Dow weakest. All of a sudden, the Dow for 2 days was the strongest and the IWM was weak. Okay, I hope I answered that question. Next question, very important, was, no, statement, very good observation. Yes, I had a Chapman wave reading in the trim gauge, my Chapman wave trim gauge, to say that regardless of what happens today, there should be weakness early tomorrow morning in the Dow. That's what that indicator says. All right. Wait. No, did I just say that correctly? No. That's wrong. It says that within 2 days, I'm sorry, mistake. There should be a 9 to 11 point rally in the E-mini futures. That's what I meant to say. That's what E-mini futures, and that would suggest that there could be a bounce coming. It could come from lower down. It could come from higher up if it's overnight into tomorrow, but it says there is a chance now that there could be a pretty decent bounce. I call it a bounce because when it's concluded, invariably you return to the trend that you're in. So this is going to be really important, and it applies to the S&P. All right, next question I had is, we'll cover the next ones as we move along. I just wanted to get to this for a second. You see this pattern? Yeah, you see this cup pattern for subscribers to my opening call every day. Look, I not only do I do all these different things, I spend a lot of time on my newsletter. Why? Because it's an whoops, I didn't mean that. Educational. It's an educational effort for me. That's why I came to TFNN. I said if it's educational as well as giving calls and a newsletter, then I'm in, and that's what we keep doing here. So this is what I do. I show you different aspects. And now look at this, if I can find the right one. Here we are. So this is the daily. See, the daily has a cup formation. This is the Dow daily, and I do a whole report on that. I show the left side, right side, price, time match, the number of bars to the left, to the right, whole bunch of things like this. I also show you the MACD expanding, the stochastic here, in this case, expanding. That was a really good action. So the news overnight, although the 120-minute chart, now I can show you the 120-minute chart because this is how it all leads up. All right. Yeah, so 120-minute chart was saying, hey, there was a cup formation with the left side, right side price time match. We went to the Chapman wave peak E. It was a Chapman wave 5. And when I did my updated 110, that had already occurred. And I said, okay, now I think I'm not going to change the short position. Let's see what happens over the next 2 days because we have a chance of a pullback here, especially based on the weekly chart. Let's get out of this and I'll show you something what happened. And this is what happened. We just gapped down and we're hitting the 14-period exponential moving average, trying to rally off that. There's the 14, the black line. MACD is still good, turning down. Stochastic still good, turning down. Hey, the day is young. That's why I'm not ignoring the fact you could have a bit of a bounce. Another reason why we didn't add to the short positions today, I needed to see how the day turned out, because if there is enough information to say Wednesday and Thursday we could be down, and that says that the trend is reverted back to the sell mode in the down the S&P, or just continuing the sell mode, that would say to me that there'll be plenty of time to add to shorts. This is just a period where you've got this inflection to the upside, and you've got the potential double top in the Qs and the IWM. All right. Next thing we wanted to do is IYT. IYT is right now, it's down 3.35, down 1.75%. Not good action at all. Peak C failure in the weekly chart so far. Peak C pullback in the daily after making a 201 round number high on the 12th of June. At peak D, there's been a big pullback to the trough D. Nice bounce. Let's see if this doesn't turn into an arch formation or an inverted V. So this is what we're looking at. So the fact that the IYT, the S&P, the SMHs, the Dow did not make new recovery highs in this move now in June says to me there is enough internal weakness that you can have a very select move here where some things move up, some things move down. You got to get the right sector. That's very important. Next question is, next chart we wanted to go to was gold. Gold was down a little earlier. It's still down. It's down 8 at 1246. Look at this, another arch formation. Weekly chart had an opportunity to rally. It's got to hold 1238. That's all I can say. If it closes under 1238, that monthly chart is going to look even weaker as that trend line support is breaking, and the weekly chart will definitely be very negative. It needs to get to the 1265 level quite quickly. That's only 20 points. It should be able to do that. Silver is also weak. SI, look at that. Silver, even uglier chart. A high-grade copper, the ugliest chart. Look at this. Smashed to the downside, breakdown. Oh, the 200 period in the monthly chart at 2.75 has been broken right now. It's at 2.746. Crude oil, gee, I didn't want to go 2 sessions for all this. Crude is down $1.77. The 120-minute chart made a very nice arch formation right here at a peak D. Once again, peak D, arch formation. Ooh, not good. And the TLT is up 25 cents. Nothing much to see there. I'll be right back.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I'm just trying to find, I want to see something here. Yeah, there it is. All right, let me move this over right there. And let me open it up. Right there. So I just wanted to see, yep, there it is. So that is Bitcoin. It's gone to a peak A, B, C, went to a peak D, pulling back somewhat at 63.40, I think, right now. It better hold 62.80, because if it breaks under 60.80, it can make a complete U-shaped pattern and come all the way back to test that 6,000, 5,800 support. All right, let's get out of that. You go on, mister. Good. Okay, so crude oil did not make a peak D. It's kind of gone to a peak C1, then a C2. But what's most important, look at the arch formation. And crude oil better hold the 71 area, because if it takes that out, that's going to be quite poor action. And at peak E, I'm calling it a peak E in the weekly chart. And that says time, maybe not so much price anymore, but it'll be time involved in crude oil. And the final thing, I want to just show you the TLT. Let me get out of the 120-minute chart. Don't need it right now. The TLT right now has made a peak E doji candle, and it's only up 17 cents at 122.12. And that's saying to me, you know, you can't rule out the fact that the yields could just be stuck in this range for a while. They can go a little higher, they can go a little lower, but they aren't doing all that much. Just as the TLT at 122.12 has 122.53 200 period moving average support. It has a lot of resistance based on the candle from the week of the 2nd of February high of 122.97. So let's just say 123.50 could be strong resistance. I think if it goes above 123.50, yields will definitely start to pull back much deeper. Now, within that context, I think I've covered all the things that I wanted, except for one other thing that I had a question about, which was the VIX index. The VIX right now is up 96 cents at 1360. I don't think this is great action for the VIX. The VIX should right now be at about 1530, and it's at 1359. So I'm suspecting, yep, we've got another little bounce coming up in the market. That corresponds to the Chapman wave trend gauge flashing a 9 to 11 point rally sometime between over the next 2 days. It could happen overnight, could happen even later today. But I can just sense that there's a lot of pent-up buying, and the pullbacks are kind of disconcerting. Only the perma bears are really saying, yep, told you, told you, told you. I think there's still enough mixed market here, which is the reason why I didn't want to get carried away by getting into, I didn't want to chase the short side on a huge gap down, and I didn't want to chase the upside yesterday on that move up. That tells me that we, in a very select area, look at this, CTAS, which is Cintas, you know, we followed real closely in the Chapman wave methodology, as well as in my opening call, for a couple of reasons. It made a new all-time high yesterday. And that was saying to me earlier on that there was like a little mini pullback, a recession type thing that was going on. And we've seen that rotating through the different sectors. I'll go through in a moment what I'm thinking here. So this says to me that the action today, back up 17 cents after pulling back. I'm watching this closely. And this is saying there's residual strength in certain areas, but there is internal weakness in others. And we're trying to get, I'll put up my hands like this. This is the justice, scales of justice. On the one hand, this, and on the other hand, that. And there's some kind of a balance that we're trying to find here. And of course, that's that justice's scales. This goes high, this goes low, and this goes high. Okay. So what we're looking at here is, and I didn't want to take any time today to talk about the president. I think it's a very appropriate market-wise. I need to do it. I don't want to waste time right now, other than to say there's a particular aspect within the president's ability to take on by himself actions which other presidents, especially the last president, hardly ever did. The previous president got his way with almost every single thing, but there was always a front man. There was always a front person. There was not necessarily always a man, but sometimes, quite often, actually a woman. That was the front person taking on all, and the media never followed up ever. So it looked like so-and-so, this is the policy so-and-so said. It was never the president said, it was the so-and-so said, right? And this is very different. Now you've got an aggressive president who says, this is what I want to do, and this is what I'm doing. So I don't see any change between what happened during the election process and after the process. The only difference is that one is up front and one was behind, but the results were the same. I kept saying that I believe President Obama got all the policies he ever wanted through, even if other people were the ones responsible in taking on that responsibility, even though it was his initiative. And so policy-wise, he got done what he wanted. And let's see what happens with this president if he gets done what he wanted. I mean, that's what the presidency is supposed to be about. That's what the people voted for, and we'll see what happens. I mean, I look at it and I say, okay, we are just the mere passengers on this boat, and we're going to be following it wherever it goes. What we want to do is to diagnose and analyze markets in relation to what the market is saying. Cintas is saying, hey, no problem here. I'm doing just great. But wait a minute, have a look at my daily technicals. They are good. They're not as good as they were before. This is a very important period for Cintas overalls, uniforms, rentals. Did want to do that. I thought it was very important. I also just want to briefly discuss the relationship of markets to the outside noise. All right. Next question. Question was, yes, correct. The TZA is not as good as a vehicle. The SOXS in the which we are still short a portion. Look at that, 6.57% move on the upside. Yeah, this is really a great vehicle. So yeah, thank you for pointing that out. AAL question, American Airlines trading down 250. That's that pattern that says arch formation. If it fails and takes out the left side low, monitor that closely. The weekly on American Airlines is just horrible, and the monthly chart went to an E/D, E/C. I wonder if I can just get that right. E/C monthly, and that almost certainly is an E. This is a V shape or a cup shape formation, double top formation. That's what we're looking at potentially now in many of the charts, where it goes to a particular high in the monthlies, pulls back and then goes back up and then breaks above it, but cannot close above it. That's usually not a good sign. American Airlines, that's the question about the XAL. Let's go there. XAL. XAL right now is down 221 at 100.04. Peak E up there, that's kind of corresponds. Peak E in the monthly chart back in January at 124.44, trading right now at 100. 24 points, that's a 24% decline. Whew, this doesn't look very good. And that's the reason why I'm saying, look at individual stocks. Look at CCI. Came across the ticker yesterday, and I thought to myself, oh my, one of my favorites, Crown Castle International, a REIT infrastructure for broadcasting, peak C1, C2 in the monthly chart, and it's testing the downtrend line in the monthly. Weekly chart, peak, gray peak B. Monthly chart is in a peak B, also gray. You know, it's acting very, very well, very well. Look, up 4 cents today. What a mixed market. I'll be right back. Basil Chapman, Package in Mr. Zell. Now it's down 180.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So a question I had 2 days ago, and I completely forgot to look at it. Maybe I did look at it, I can't remember. But we were making this H pattern, lowercase h that goes to lowercase m on the TRCCI, and that is the, what was the name of this again? This is the, I believe it's the Reuters, Thomson Reuters, yeah, that's right, Thomson Reuters equal weight commodity index. And you can see this monthly chart says, hey, a rectangle formation between say 440s and 400, maybe 390s, not too much going on yet. And then we got the breakdown. And the question I had in the den was, is it good to add to Mosaic? This is a commodity area. And I said, no, have to hold on. And you can see this right here in the commodities. Commodities breaking down, peak E. Now, what's going to go on with that inflation story? That's the reason why I think that the whole trade war, my thinking here is that in 8 months' time, we might find that inflation is out the box, that genie is out the box 6 to 8 months' time, and we've got inflation that, whoa, it just comes back really strongly. That's where maybe commodities come in, but believe me, tariffs, I don't think there's anyone here that can tell you for sure, because it's been so long ago since we really had tariffs. It was back in the 30s, I believe, the 20s, 30s. Tariffs can be very good if they are kind of unspoken, but once it becomes a public, it's anointed with the title of, oh my God, tariffs, anything can happen. Because tariffs have been going on in a very subtle way for quite a while, but they've been untariffs. In fact, the last administration allowed many of the countries, especially China, just to do whatever they wanted, just about, in terms of the exports, imports, the pricing. Remember, they cut prices to be able to get a really strong leverage here in the United States, which they all around the world, it turned out. And now China's had to raise prices internally because of wages, because there's a bigger middle class that's ever been in China, from what I've read. Now all of a sudden, what we're looking at is that there are so many countries wanting to sell us goods that's kept us in commoditization of everything, kept prices lower. But once you get into tariffs, you don't remember. I said before, it's the fine print that becomes the little tiny 8 size pica print becomes 38, 48, 68, big bold print in a few years' time, because it becomes the most important thing. Nobody was looking. Remember, politicians always say, mark my words. And as you're looking at that hand, this hand's doing something very different. And that's what's been going on. And China got away with that. And now they're being, they've just been told, hey, it's going to have to stop. Now, sometimes the timing of this is all wrong. The idea is right. The timing's wrong. We won't know. We won't know for a long time just exactly what's happening. Technically, it should help the United States, but we don't really know. This is really, I'm not sure yet if anyone can really say whether it's going to have an overall, I'm talking about the big impact, which the idea is to build up, to help our gross product. I'm not sure how that's going to help. Okay. TRCCI down 6.06 at 411.51, breaking significantly below all the left side support level in the 416s. Not a good sign. Next question was the XMI. Well, let me just say that the XMI is something that I used to trade, used to do it with options years ago. It was a lot of fun. Then all of a sudden, it kind of went out of favor. I stopped doing that, and it went out of favor. But it has the look of the Dow now more than ever before. I used to always say the XMI is the closest thing to what I would like the Dow to look like. Keep your eye. Look at the left side chart, the right side, the middle chart, and the right side chart. Keep your eye. This is the XMI. This is the XMI ARCA Major Market Index trading at 2,456, down 17. Keep your eye. Here we go. Look at this. Not too much difference in those charts. They look the same. Why? Because the Dow is now the most balanced I've ever seen it. It is extremely important for my way of looking at the Dow every single day for the last 30, I don't know, maybe more years. I made a call on the Dow. This is the most balanced. This means it's got tech, it's got financials, it may be a little bit too much financials, but it's got everything. Home Depot, Costco, not Costco, it's got, hey, what happened to that, my list? Yeah, everything. Disney, Coke, come on, it's got everything. Pharmacy, the works. All right, enough with that. Yeah, and the same thing, if you look at the Wilshire that I showed the other day, same kind of pattern. All right, I want you to go to a question here, SMHs. Yeah, look at the SMH. SMH is down a little bit here. It's down 2.47, down 2.31% at 104.41. Remember, we switched from the long position. We were short earlier in the year. Then we went long. Just in May, we were long. And we switched to short. We took quite a bit off. We do have some short left. And what I'm looking at here is that we were short via the SOXS. Now, what I am looking at is it held the 200-period moving average, the orange line of the daily. It held it 3 times. It tested it, and then it broke to the upside. What's really important is that the weekly chart is making either an inverted V-shaped pattern or an arch formation. That's going to change if there's a rally to 108.50 or higher in the next couple of days. I'm not sure why there should be, but if there is, but it's that monthly chart that's so important to me. I'm not even going to discuss it. I'm just saying, look at that oval pattern. A lot going on. A break under 95 would be very negative, and a move above 115 in the summertime would be extremely positive. Leave it at that. Hey, wait a minute. You've got Intel, INTC. Peak A, gray peak A, trying to rally, had its top at a peak D back at 57.60. Just double check for round numbers. On the 4th of June, has pulled back from the 57s down to the 48s. That's a big move, and now it's trying to rally, but my eye says this is probably a peak E top in the monthly chart. Watch it closely. That's Intel at 51, 57. If it gets to the 53s, I have to be impressed. If it breaks under the 50 level, not impressed. Micron, MU, let's go to that. Same sort of thing, made its top at a peak E in the weekly and the monthly chart. Right there, the week of the 1st of June at 64.66. I must update these charts. They were on the other platform that I had that got changed. So this is MU, Micron, NVIDIA. Must look at NVIDIA. Why? Because it's been a bellwether for the semiconductor index, even though they do graphic processing, workstations, gaming, mobile devices. They're just about everywhere with whatever they produce. and they made a peak, a leg D. It's not a peak until you go for the full month with no new high above 169.20 high of the 14th of June, peak E in the weekly chart. This is going to be a clue. At any point in the next 2 weeks, if NVIDIA breaks 240 support, closes below 240, that's going to be very ugly. It's at 248. If it closes above 250, 650, I'd say, hey, that's good action. Dow's down 171. I'll be right back. Yeah, we'll talk about Tesla as well in a moment. I think I talked about it yesterday.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Folks, don't forget, Steve Rhodes comes up straight after my show, and then comes David White, and then comes a Peak F right there. Then comes Tom O'Brien wrapping up the day's activity. Peak F in Monster Beverage Corporation. So the question is, George from New York. Hi, Basil. I hope all is well. Looks like Monster is basing. Do you think this is trying to fill the 70 gap? We'd appreciate your thoughts. Have a good show, George. Full disclosure, I'm still long Monster. Yes, I remember that. As I picked up the chart, I saw the MNST. I did it, and as I was doing it, I said, I remember you going long this. So, folks, Monster is trading at 60.08, up 51 cents on a day, with the Dow is down 181, the S&P is down 16. What is it saying? That is saying, remember just a little short while ago, I was saying there are stocks that don't even know that there's a bear phase going on, and there are other stocks that don't even know there's a bull phase going on. Monster's acting very well. It is underneath the high of 70-ish. Back in January, it pulled back to the 47s. Now it's trading at 60.0. George, I'm going to do this tomorrow. I'm going to make a big note right here. George, MNST. There's nothing to do right now. It's acting extremely well. But the weekly chart is in a gray leg A, and it says that a couple of things need to go on for it to hold the support at 56 in the 56s. If you want to add to it, 56 is about the place that I would do it. But I'm just going to say to you, I'd like to look at it again tomorrow. It's too much to do right now. I don't have enough time. So we're about to wrap up. We're about to go to Steve Rhodes. So stay tuned. I do want to say that, yes, I have the Chapman Wave trend gauge flashing, which says at any point you could have a sudden push to 9-11 points in the E-minis. I'm sorry. I'm looking at this and I'm saying you could get bounces. But what I'm looking at is that there's a rotation going on, and now it is starting to impact. Oh, did I see the IM? No, I didn't see. Oh, let's see. IM at the moment. Oh, okay. Yeah, I'll cover the news hour. Okay. Now, most importantly, there is still enough residual strength for bounces in some sectors. But I'm looking at this and I'm saying, I believe that the Russell 2000 and the QQQs are the clue. If they start to turn down, there's a real good chance that finally you have a big pullback. So this is very important. Huge rally in the next few days for whatever reason. I'll deal with that, but this is a very mixed market. Have a great day.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.